Welcome back to the channel. Today, we're diving into some incredible developments surrounding Internet Computer Protocol, ICP, that you absolutely need to know. From massive liquidations of short positions to impressive network growth, a powerful AI launch, and sharp increases in token burn, there's a lot happening. We'll break it all down to understand where ICP is heading and why the momentum may finally be shifting in favor of the bulls. Whether you're already invested or just observing, you won't want to miss this breakdown. This video is for informational and educational purposes only. It is not financial advice. Always do your own research and consult a professional before making any investment decisions. Let's kick things off with one of the most explosive stories in the ICP ecosystem, the widespread liquidation of short positions. Over the last 72 hours, shorts on ICP have been hit hard and repeatedly. These liquidations didn't just happen once or twice. They unfolded in waves. At the price point of $5.68, we saw a staggering $6.96 billion in leveraged short positions wiped out. Shortly after, at $5.79, another round of liquidations totaled $6.37 billion. Then again, at $5.90, $5.5 billion worth of leveraged positions were erased. And when the price reached $6.34, we still witnessed a significant $4.16 billion in liquidations. Although this final wave wasn't as big, it still highlighted a broader shift. Shorts are losing their grip on the market. Now you might be thinking, how can liquidations exceed the entire market cap of ICP? That's a valid question. Here's the explanation. Many crypto exchanges offer massive leverage, sometimes up to 100x. So even a small capital deposit can control a massive position. When price action moves swiftly against that position, you get these outsized liquidation numbers. It's also worth noting that not all liquidity removed at these levels means forced liquidation. Many short sellers, seeing the bullish trend forming, quickly withdrew or repositioned their orders at higher prices to reduce risk. That's part of the reason why some levels appear to show less liquidation volume. Traders got spooked and repositioned before it was too late. But make no mistake, the dominance of long liquidations that used to be a hallmark of ICP trading is now being countered. Bears are facing real losses. We're witnessing a subtle but powerful shift in trend, and this could be signaling the early stages of a bullish phase for ICP. Let's move deeper into the liquidation heat map. Earlier this week, the activity around $5.68 showed large pockets of liquidity that got hit hard. Most of that was either liquidated or quickly removed. Since then, liquidation levels have somewhat cooled, currently sitting near $4 billion. While that still sounds like a massive figure, it's a noticeable drop compared to previous levels. This gives shorts some breathing room to reposition. But if price momentum continues upward, we could see a new wave of liquidations when we reach the next big resistance, likely around $6.8. Historically, when we see more shorts liquidated than longs, it suggests a strong uptrend. That's what we see with Bitcoin right now. But for ICP, things had been the opposite for a long time. Shorts dominated. That, however, is beginning to change. Now let's talk about the Caffeine AI launch, which has ignited fresh optimism across the ICP ecosystem. There was some early skepticism around whether Caffeine AI would actually consume enough on-chain resources, especially given its integration with large language models that could operate off-chain. But when the platform launched, and this is key, ICP burned 17,000 tokens in a single day. Let that sink in. To add some perspective, ICP's average weekly burn was sitting at around 19,700 tokens, so a one-day spike of 17,000 is remarkable. It suggests that Caffeine AI has the potential to dramatically scale token burn, especially as more users and developers adopt it. Some of this burn might have been a proactive move by the Definity Foundation, preparing for increased on-chain storage. Even so, it confirms that the infrastructure is actively using resources and that Caffeine AI is more than just hype, it's driving real on-chain impact. Now let's shift to burn expectations. If we look at the current trajectory, with momentum still relatively low and limited dApps consuming cycles, the current burn of 20,000 ICP weekly feels underwhelming. But imagine a scenario where we 5x from here, reaching 100,000 ICP burned weekly. It's not a moonshot goal. It's a realistic and conservative target based on early data. Caffeine AI is already proving its weight, and it's only just beginning. Let me share a personal highlight. A user cloned an app from the Caffeine AI marketplace and reconfigured it, turning a jewelry app into a coffee shop application using just two AI prompts. Two prompts. That level of functionality, speed, and customization is virtually unheard of in Web3 today. No other blockchain ecosystem, not Solana, not Ethereum, not Avalanche, is currently capable of such rapid and high-quality deployment. If a project on another chain demonstrated this level of performance, we'd be seeing massive price surges. But that's the paradox of ICP. The product is advancing faster than the price can reflect. Here's why. The ICP price is not being weighed down by poor development. It's being suppressed by outsized short interest and derivative market manipulation. Exchanges that offer high leverage are enabling massive short pressure that keeps the price subdued. Now, some people question the 1 million dApp deployment forecast given by ICP founder Dominic Williams. But if you consider that the community consists of around 10,000 to 15,000 highly active developers, and even a fraction of them build multiple apps with the help of Caffeine AI, hitting 100,000 to 200,000 apps in just weeks isn't unrealistic. Over a year, 1 million is absolutely possible. Let's also zoom out and consider ICP's expanding footprint. The integration of chain key Bitcoin, Ethereum, and USDC is starting to show results. These multi-chain solutions are perfect for e-commerce use cases, especially when combined with Caffeine AI for front-end development. As use cases grow, so will adoption, liquidity, and transaction volume. Speaking of growth, the total number of Internet Identities has now reached 2.8 million. What's more encouraging is that this trend has recently accelerated, a possible early sign of the caffeine effect as more users come on board. Now let's get to the heart of what drives prices, not speculation, but actual utility, adoption, and developer activity. We've started to see the transaction volume tick upwards again after a previous decline. This signals that more users are transacting, more dApps are being tested, and more real economic activity is taking place on-chain. Not just on exchanges, but internal transfers are increasing too. On the accumulation front, we continue to see larger wallet holders, sharks, dolphins, and fish, adding to their ICP holdings. Though retail investors have slowed down slightly, the smart money is still confident. More importantly, wallets holding over 100 or 1,000 ICP are still climbing, albeit gradually. We're watching closely for a surge once Caffeine AI exits alpha and rolls out to the public. A common criticism has been that the DFinity Foundation is dumping tokens, but the data doesn't back that up. The top 1,000 wallets hold over 80% of the total supply, and that share has grown in the past year. If DFinity were dumping heavily, we'd expect to see that figure drop. Instead, it's holding steady or even increasing. Here's the truth. DFinity needs to sell some tokens to fund operations, salaries, development costs, ecosystem grants. Without that, there would be no progress, no Caffeine AI, and no real product. Expecting them to build an entire decentralized future without funding is not only unrealistic, it's delusional. Let's also examine developer activity. Right now, activity has slowed slightly, but this is to be expected before a major rollout. What matters is whether this activity surges after Caffeine AI's full release, and early signs suggest that it will. Developers aren't being replaced by AI, they're being empowered. AI accelerates productivity, but it's developers who will take that groundwork and build complex, powerful apps. Now let's benchmark ICP against other projects. Just a few months ago, Solana was generating hundreds of millions in revenue monthly. Today, it's dropped to $4 million. Compare that with ICP's burn in revenue relative to its market cap, and ICP comes out surprisingly strong. Filecoin is another standout, showing very promising revenue metrics. Avalanche, Near Protocol, and BNB Chain all have larger market caps but lower relative revenues. That shows ICP is punching above its weight class when it comes to actual performance and usage. Even when you compare Ethereum and Tron, the market cap to revenue ratio shows ICP holding its ground surprisingly well. Tron, of course, is in its own category, but the broader picture? ICP is not lagging, it's progressing. So what's the big takeaway here? ICP is entering a pivotal phase. Shorts are getting punished, developer activity is poised to rebound, token burns are accelerating, and Caffeine AI is proving itself as a real-world scalable solution. The infrastructure is strong, and the foundation is focused. All the right ingredients are falling into place for a major shift in sentiment. But here's the bottom line. This is a long game. If you're looking at ICP purely for short-term gains, you might miss the forest for the trees. What's happening here is the building of a decentralized ecosystem unlike any other. As the tools improve and the user base grows, the market will catch up. So stay tuned. We're going to continue tracking everything, from burn rates and identity growth to developer momentum and adoption metrics. If the current trend holds, ICP could be one of the standout stories of the next crypto cycle. So, what do you think about ICP's current position? Are you bullish on its growth in AI and DeFi? Drop your thoughts in the comments below. If you found value in this deep dive, don't forget to hit that like button and subscribe for more breakdowns like this. Thanks for watching. Stay curious, stay cautious, and I'll catch you in the next one.